Hello everyone, let's review our homework problems and answers, see what corrections we need to make, and make sure we understand tax credits. So, number 46, we're talking about the child and our dependent care credit. So we have a situation where we paid for $7,900 for 3 children. Okay, they received $1,800 assistance from their employer. So the net amount is only $6,100. We also, the other number that we use in calculating this credit is $6,000 for 2 or more children. So it doesn't matter that we have 3; it's still $6,000. You subtract the $1,800 from that as well. So that's our 3 numbers are the amount paid after take away the amount of the assistance, the $6,000 take away the amount of the assistance, and the lowest paid spouse, which we were told each spouse makes equal amounts, which is divided in 2. So we take the lower of those 3 numbers, that's the 4,200. The percentage is just found on the table based on their AGI, and that's 20%. So we take that times the lowest of those 3 numbers, and that's our credit. This would be a non-refundable credit. So this is only going to help us if we have tax liability. If Tim had no income, then he would be the lowest paid spouse, and the amount to choose would be 0, because the lowest paid spouse number here would be 0. So the credit would come over the amount that you would choose, the lowest of the 3. 0 would obviously be the lowest. It doesn't matter what the percentage is, because 20%, 30%, whatever of 0 is 0. So there would be no credit. This is for where either single parents, where they have to work, or where both spouses work out of the house. Now, number 47, also child care. This is a single mom, so we don't have to worry too much about the looking at both spouses, obviously. But the amount paid for child care, $3,900. Max for 1 child is $3,000. The fact that she paid her mother, as long as she is not a dependent, is okay. So we don't have to do anything adjustment there. So there's only 1 parent, so we just need to know her income. And she was self-employed and didn't have a lot of income, $1,900. Child support doesn't count for AGI, doesn't count in calculating this either. Choose the lower of the 3, and the lowest is the $1,900 from her business income. But because her income is so low, she gets the highest percentage on the table, and so her credit is $668. Again, a non-refundable credit. My hunch is that with $1,900 of income, there is no tax liability, and so this credit is going to do not any good for this taxpayer in this situation. But that's the calculation you would use to see. Number 50, we're going to look at education credits. And remember, we always want to consider if possible, the American Opportunity Tax Credit, because it's far better than the Lifetime Learning Credit. But this situation, the AOTC would be $2,000 plus 25% of the next $1,400. We're not over the AGI, so that's the credit. So you don't have to worry about the limitation. Lifetime Learning, if they somehow didn't qualify for the AOTC, would only be $680, 20% of the $3,400. For the second scenario, it's $2,000 plus 25% of the next $1,800. Again, we're not over the AGI, so we don't have to make a limitation on that. Lifetime Learning would only be $760, or 20% of the $3,800. In both cases, you obviously want to take the AOTC. You can't do both. That's the rule. Now on C, we're into a situation where the AOTC cannot apply because this is a graduate student. They've used up their 4 years of the American Opportunity Tax Credit. So now only the Lifetime Learning Credit would be available. 20% of the $8,000 would be $1,600, not over the AGI limit, so we're good. That really is the only choice for that one. to get some credit. Obviously not as good as it would have been the same amount with the AOTC. So looking at tax credits that actually, or education credits that actually reduce, we have the amount paid. Credit maximum AOTC is $2,500. We're over the threshold. However you want to look at it, how much you're over by this formula or how much you're under the top level of the threshold, you got 40% left. So either a 60% reduction, which means you'd use this calculation to get 1,000, or you have 40% left, use this calculation to get the 1,000. Either way, $1,000 credit for American Opportunity Tax Credit based on the phase out for AGI. So 54, the foreign tax credit. We had foreign income of 8112. We divide that by our worldwide income. Now understand, well, this foreign income is included in worldwide income. All right, if you ever have this in real life, you got to have it in both things. That's how it was intended in this scenario. So 9% of our worldwide income was generated in a country outside the United States. So our tax credit is the lesser of 9% of our tax liability or the amount we paid in foreign taxes. So in this case, we take the lesser, and it's $1,326, and that's our credit. If we pay $2,400 in foreign taxes, then we take the lower of the $2,041, or the $2,400. In this case, it would be the $2,041. That would be our foreign tax credit. So the basic idea is you get a credit for the taxes you would have paid, or how much you did pay to the other government for income you earned somewhere else in the United States, outside the United States. So 55, we are looking at the child tax credit and how it phases out. So the first one, we have a single parent threshold is $200,000 for everybody single. Amount, we're over $13,400 over the threshold. So we had one child, so the tentative credit starts at $2,000. We're over the threshold by 13.4. We just divide our 13,400 divided by 1,000. We get 13.4. We round that up to 14. Always round, even though that typically you round 0.4 down. In this case, you round up every case, and you get 14. Multiply by $50 per $1,000 you're over, and your actual credit is $1,300. So the second one, we're not over the threshold. We're quite a ways underneath it, so our tentative credit is $6,000 for 3 children, and our actual credit would be $6,000, no reduction. For the second one, we're married couple over the threshold of $400,000 by $79.33. So our tentative credit for 2 kids is $4,000 over 7.93. We always round up to 8. 8 times $50 is our reduction of $400. Subtract that from our original $4,000. We're at actual credit of $3,600. And then the last one is a retirement savings credit. AGI $37,500 for a married couple. They contribute $1,600. They get a 50% of that as a retirement tax credit. Note something, the amount contributed is reduces our AGI, and we get a credit to reduce our tax liability. It is a non-refundable credit, so it cannot result in a refund, but it can reduce our tax liability. So they're at the threshold where they would be 50%. It's all based on, just look up the amount of AGI compared to the table. And then the second one, we're at 58,000. And you just notice how quickly this goes away. we're now at a 10% retirement savings credit instead of a 50%. So from going 37,500 to 58, the amount, the credit goes from 50% to down to 10%. This is a head of household, 33,000. At 33,000, they get a 10% credit. And then a single individual, only AGI of 12, amount contributed 2,300. However, the most that you can be considered for this credit is 2,000. So it doesn't matter that she put in 2,300. We just use the 2,000. But our income is low enough that it's a $1,000 savings credit. Problem is they're not going to have any tax liability, and so this non-refundable credit is probably not going to, again, do them any good. But at least you have seen how the calculations are done. Again, you look it up on the table that determines your percentage. Maximum to be considered is 2,000. So some percentage times 2,000 is the maximum credit.